welcome to the Multifamily and More Expert Series, where we dive deep into a specific topic with our expert guest in the area of real estate, mindset, or anywhere in between. Today's guest, Mitch Jaworski, is with scaredycatguide.com, where he is an expert in real estate and crypto, and that's where we're going to spend our time today on cryptocurrency. So, Mitch, welcome back to the Expert Series.
Good to be here again. Thanks for having me, Jamie.
Absolutely, absolutely. So, all right, crypto. I don't know what it is. I don't understand it. A lot of people ask about it. I ask about it. I know there's a blockchain, Bitcoin, all these different terms.
All those fun, confusing terms.
Yeah. Can you unmask, like, what is crypto and how do people get involved with it?
So well, I think the beautiful part about it is that once you learn the basics, literally this little light bulb goes off and you're like, oh, this is actually pretty simple. I mean, unless you're going to be like a blockchain developer,
I hope so.
It's pretty simple. And that's no different than, if you were going to be coding for like Facebook or Google or something. I mean, all of us would be confused by that for the most part. So as long as you stay away from coding a blockchain, I think you'll be all right. And I think a lot of people have heard of Bitcoin more than they've heard of cryptocurrency. And, it goes back to just the whole name recognition, which is why I think Bitcoin, which may not be the best technology at this point in the space, is always going to probably be around for a while because, it has that first mover advantage. And, it's basically the Kleenex of tissues, the jacuzzis of hot tubs, so.
Yeah. Jacuzzi's a brand name?
Jacuzzi's a brand name.
Oh, I didn't know.
Yeah, unless I'm crazy. I mean, I'm going back like 20-something years when I worked in the Harrow's warehouse out on Long Island where we had hot tubs for sale and patio furniture.
I didn't know
that. The good old young days when you're grinding.
Yeah.
But yeah, so the first thing I kind of want to just get out there is that a cryptocurrency is basically something that runs off a blockchain. So in the end, the technology is the blockchain. The blockchain is the technology that is kind of going to revolutionize things, and already is. I mean, major companies are using it. Like IBM is already using blockchain technology for logistic purposes. As we saw, Libra, Facebook wanted to do Libra, basically make their own crypto coin. But it's the technology behind the coins. It's the blockchain technology. And what I'm going to do is I'm going to share a quick presentation on exactly what a blockchain is and kind of break it down. So you just have a simple understanding. And then from there, we can understand that Bitcoin is essentially a product of that blockchain. You can actually have several coins off a blockchain, and we've seen that even with Bitcoin, where the blockchain was actually split off into a new chain, and you have Bitcoin Cash. And there's several actually versions of Bitcoin, but everyone mainly knows Bitcoin and then Bitcoin Cash, the two most popular Bitcoin name brands. So those essentially run off the Bitcoin blockchain. It's just a split of the chain for Bitcoin Cash.
Okay. Yeah, that's kind of where, like, I think the coin I feel like I kind of get, but then you throw in if you want to share that.
Yeah, it can get, and that's the thing.
Yep. Blockchain and all this, and that's where I lose it. So yeah.
And there's different ones. I mean, obviously, most people have heard of Bitcoin, they've heard of Ethereum, they've heard of Litecoin. Those are kind of the big three names. And Ethereum it's called an ERC20 token, and basically they set it up where people can create projects and tokens off of the Ethereum blockchain, like left and right. So a lot of cryptocurrencies that launched back in 2018 when we had the quote unquote like craze and mania, they were launching through Ethereum. So they essentially were collecting Ethereum cryptocurrency as payment for their new coin. So there's a lot of crypto projects out there that own a lot of Ethereum, which is another interesting dynamic. But let's just get into the basics of what a blockchain is and what cryptocurrency is.
Yeah, let's get into that, because there's a lot of it, like all these terms I think are kind of out there. And
and I'll start jumping into terms that we don't even need to get into.
Got it. Yeah, let's pull up this presentation. I'm kind of curious to see
let me share out my screen here. Let's make sure. Hopefully it's still working. There we go. Boom. All right, crypto revolution, which, I mean, in a way it is. I mean, we've already seen it. I mean, we had the revolution with the internet. I mean, think about the internet in 1995, where a lot of people like, what the heck is this? Who the heck's going to go online? And now.
That's, real quick, that's a good point. I don't think I could still describe the internet. It would be like it's this with like, you got stuff, I don't know if I could describe it, but I know what it is. Does that make sense?
I'm actually going to show an example how, in a way, cryptocurrency is similar to things that we already use that are internet and web based. So it'll probably make it a little less confusing. But
Got
yeah,
it.
I mean, it's tough to describe the internet, just like I guess maybe it's tough to describe crypto. But in the end, I mean, it's essentially a web of servers all throughout the world.
Yeah.
I mean, in the end. So, but
Yeah.
yeah, so let's jump in. Common questions I always get about crypto, though, is people are scared of it. Like, you know, is it safe? Like, it seems shady. I mean, obviously, the market's a little more mature now with having, you know, exchanges like Coinbase and Bittrex and things like that. So people feel a little more comfortable with it. But there's still that worry of, like, I don't get it. Like, it doesn't go in the bank. So how is my money safe? I'll alleviate that, you know, as we go through this, because in the end, it is pretty safe as long as you don't do anything dumb. That you wouldn't want to do even with your bank account information. So it's kind of similar to just protecting your bank account.
Makes sense.
And that goes back to, you know, will my Bitcoin get stolen? Again, it's like, don't give out your private information and it won't get stolen. I mean, obviously exchanges can get hacked, you know,
Well,
like
just
you
like
have your
anything,
money on an exchange,
Right.
which I don't suggest to do. And we'll get into the different places to keep your coins. But it's no different than if, you know, your bank account got hacked. It's the same different if you have your, you know, cryptocurrency on an exchange. So
Makes sense.
like a lot of commonalities, you know, and then it goes back to will I get hacked? And again, I mean, yeah, I mean, you could, you know, click on something that's a phishing scheme on your computer, but that's a risk when you're on the internet anytime.
It's a risk when you go to Target getting hacked.
Well, yeah, exactly. So, I mean, that's what so that's what's funny about it, because like all the quote unquote possible risks are no different than our current everyday life. And in ways, crypto is actually safer. And we'll probably see that as we kind of just discuss everything.
Interesting.
So let me just jump right into, you know, what is cryptocurrency and what's the blockchain? All right. So the first thing about it, and the reason why people like it, is this decentralized nature. So basically, it takes out that centralized hub, that centralized worry. So like you, in a way, are less worried about your information getting stolen or you getting hacked, because your money and your information isn't sitting under one corporation's, you know, centralized servers that obviously are a big magnet of attraction for hackers, because they know, hey, this is the gold mine. Like if we break into Visa or MasterCard servers, like we hit the jackpot, as opposed to like me holding my information and my cryptocurrency, you know, on my personal machine or basically within a block. I'm less of an enticing target. Like no one's coming after me personally. You know, I'm not, you know, I have a chunk of Bitcoin, but I'm not like some Bitcoin whale. So I'm not really worried about.
I think the block is now starting, the blockchain. I think you just said a couple things that are starting to make, I think, we'll see how it goes, but are starting to make this maybe become clear.
Yeah,
that's interesting.
And you know, if you have questions later, because I'm going to kind of just push through it, so we have time afterwards. So it's free market. The reason I want to point that out is because a lot of people are frustrated with, you know, the banking system, with, you know, the way markets are manipulated, controlled, the regulations and all that. And in a way, a decentralized blockchain kind of gives you a free market, because I can basically send and receive Bitcoin or most cryptocurrencies as I please for either fractions of a penny at cost or no cost on some blockchains. So if, let's just say hypothetically, like here's the thing, you know what? I know that you know, deal with investors in Europe, you know, you guys with your real estate. Let's just say you had an investor in France that was into cryptocurrency and wanted to be paid in Bitcoin. You literally could take Bitcoin that's sitting in your wallet and transfer it to whatever, you know, he'll give you his wallet address, which we'll get into. You can transfer it to him and boom, like that, money's transferred. You didn't have to deal with any nonsense about fees through your bank, you know, wire transfer fee, waiting a day through a wire transfer. Bitcoin's not the fastest one in terms of transfers, but there are other cryptos that their blockchains process in seconds. I mean, there's one I'm involved in, it's 3-second transactions. So when I transfer coins, in 3 seconds, you have payment. So I could pay you in 3 seconds for no fees. It doesn't matter if you're in France, Zimbabwe, or Brazil.
Right.
I can back, and so I think that's one of the big draws for people is that it is a borderless way to transact,
Okay.
and it gets rid of all the red tape. So that's a positive, at least in my opinion. So open ledger, and this one is, I think, really important because I can't see the books of JP Morgan. I can't see the books of Visa. You know what I mean? Like, obviously, you know,
Yep.
they submit their annual reports and all that stuff, but like, I literally can't comb through their transactions if I wanted to. You can do that essentially with cryptocurrency. So like Bitcoin, just like most of the other cryptocurrencies, is literally an open source code. In fact, I think that's the next thing it says, open source. So open ledger and open source. So basically the ledger is open to anyone. If you want to look at the Bitcoin ledger and see what's transacted, what coin, you know, moved when, like, you can see all this stuff. And then the open source is the code. So there's a site called GitHub. This is where a lot of basically techno geeks and coders basically put their code for whether it's cryptocurrency or even other more traditional technologies. But if you wanted to, you can go to GitHub and you can see the Bitcoin basically code. It's out there. It's not hidden. Like, it's not like
Gotcha.
proprietary technology. Like,
Open
it is
source,
out
open
there
ledger.
for, it's out there for everyone to see.
This is GitHub, G-E-T-H-U-B?
Yeah, GITHUB, GitHub.
GitHub.
Yeah, GitHub. Yeah,
Got it.
there's so much stuff on there. It's crazy. But yeah, so it's an open ledger. It's not a closed book. It's an open book essentially in terms of transactions, you know, and whatever, whether it's monetary or not. And then open source, as in, you know, the code that runs the blockchain, you and I can physically go look at. So if I was like, you know, a tech savvy coder person, I'd probably be digging in, checking it all out. You know, I mean, I've looked at it, but it's way above my head. I'm an investor. So I think that's another thing that people like about it is that there's no secrets. There's no hiding. There's no, you know, Wizard of Oz, you know, behind the curtain. And there's no, you know, you can't cook the books.
Yeah.
There's going to be no Enron. You can't Enron, you know, with Bitcoin.
Got
So
it. Okay.
I think that's something that a lot of people like, especially people that, you know, kind of experienced those things as an early adult. You know, the crashes, the, you know, 2001, 2008, you know, things like Enron, things like Bear Stearns. So this, I think, kind of, you know, resonates with that generation and myself, because I'm kind of in that generation.
Sure. Yeah, makes sense. Okay.
But yeah. So why a blockchain? Let's get into what a blockchain is. So basic example, you'll see basically you have block 0, 1, 2. So with Bitcoin, the initial block 0, is called the Genesis block. And that was basically what started it all. And now within each block, there's certain information. Now, obviously, there's all the information that was executed in that block. You know, basically, blocks are produced to essentially execute transactions. If a block isn't produced, my Bitcoin transaction is not going to be completed. So that's why there's basically, they call them miners, Bitcoin miners. What they're actually doing is they're producing blocks. They're actually running the blockchain for us. They are essentially keeping the blockchain moving so our transactions process. And then at every so often block, they get rewarded for this with Bitcoin. And that's essentially how they earn their fee, because they're not getting paid anything to do this. So that's also a very different and unique kind of like business model, so to speak, in a way. So when you look at block 0, you'll see in there's, you know, timestamp, data, hash, previous hash. The timestamps, obviously, when the block is, you know, produced. What I really want to focus on is the hash, because all the information, anything that happens on the blockchain stays on the blockchain. It never goes away. You can't like mute it. You can't go back. Like, it's there. So like, once you do something on the blockchain, there's no hiding it. But it would be crazy to essentially store every piece of information on the blockchain in each block. The blockchain would just become way too big. Like it would be like, you know, a zillion terabytes, you know, in no time flat. So instead, the hash basically tags a block, and that hash is related to everything that's in that block. And that hash is what gets pushed forward. So when you go to block 1, you'll see in red it says hash, and that's the hash that's getting designated to block 1. And then you see previous hash, as the arrow shows, and you'll see it's the hash from block 0. So now in block 1, you have everything that was performed in block 1, and you have the hash that references everything performed in block 0. And this essentially is how the blockchain works. Like, that is it. And it just moves forward block by block by block.
So,
and how often a block is produced depends on which blockchain you're on, because definitely different rates of production based between Bitcoin, Ethereum, Litecoin, other ones like Steam, EOS. There's so many now. So I mean,
well, let me dive in on a couple of real quick.
Yeah.
When you say what happens in a block? So I buy a coin, right? Like I say, okay, I'm going to spend $1,000 to buy this coin, whatever it's trading for, right? $1,000, I buy a coin. So I now have invested in this coin with my $1,000, and that coin resides in block 0, correct? Or am I saying that?
Not necessarily, because I mean,
does the transaction happen in block 0?
Because here's the thing: if you buy off like a centralized exchange like Coinbase, generally they either have Bitcoin on hand, or maybe you're even buying it because they have basically their bid offer. It's almost like buying a stock in a way.
Right.
So the centralized stuff might not exactly be blockchain transactions, but if you move if you move Bitcoin, which in a way could be a buy and a sell. Like, let's say you want to buy Bitcoin directly from me.
Yep.
I'm going to send you that Bitcoin. That transaction will be that transaction is not going to process until basically the block's produced that it essentially, lands in, after it gets its confirmations, which is a whole nother thing, because you need X amount of confirmations. That's part of security, is that you need a certain amount of confirmations in order for the transaction to process. And that's also a security feature. So basically, it kind of prevents the hacking.
Yeah.
But that's getting deeper into it.
No, that's okay. But let's stick to the block. So I do the transaction with you directly. It's that transaction.
That transaction will literally have a transaction ID that you will be able to find, and it essentially will be on the blockchain.
So how many transactions are on a block?
Honestly, top of my head, no idea.
So to decentralize blockchain, like if this were a centralized bank, I'm picturing this giant ball with all the information. Everything's happening in the same ball, right? Like in, out, in, out, in, out, and out. But with blockchain, you're saying, hey, transactions happen in a block, and then at a certain point, and maybe without getting too deep, a second block is built for the next set of transactions, and the next set, and the next set. And they all stay attached, but they're separate little separate little transaction hubs for a number of
transaction hub's the perfect way to put it.
Okay.
Perfect way to put it.
Other question then is, you mentioned about the exchanges, which I take like stock exchange, right? Same sort of thing. Are those a way of centralizing blockchain?
I wouldn't say it's a way of centralizing blockchain. It's a way of centralizing cryptocurrency in a way. So and I'll just continue to use Coinbase as an example, just because it's the most popular one in the US and really the easiest to use. Like, it's very it's no different than like signing up for a Charles Schwab account. Look at something like Coinbase, a centralized exchange, the same as you would look at Charles Schwab or Robinhood or Ameritrade. Exact same thing except for crypto. That's the easiest way to look at it. So it doesn't really have to do so much with the blockchain. The blockchain, like I said, is essentially what just runs what these coins are on. You can do 1,000 other things with blockchains, and that's why there's a lot of major corporations that are using them. And like IBM has implemented blockchain. At this point, it's got to be at least a few years ago, and they use it for logistic purposes.
So that's the big thing. A lot of people.
Yes, it's a tech.
Right.
There you go. It's a technology, blockchain technology.
And these transactions happen on the blockchain technology. It's not built for coin trading. Blockchain, the technology itself, it can be used in many different facets.
Oh, it can be used for so many things, and it's already being used. It's being literally, like, one of the biggest things it's being used for is for tracking product and inventory. Like, literally, like, we're going to be at the point where blockchain technology is going to be used to track essentially like a pair of Nike sneakers when they come off the assembly line in China from that moment to when literally it gets sold at the store. Like that is essentially what the blockchain technology is going to give us the ability to do, because all that information can be recorded. And since the blockchain essentially is immutable, like you can't like go back and fudge it.
Got it. Okay. So, all right, I want to keep going on this because this is interesting to me. So one quick question on this. So, and maybe this is the wrong way of asking it, my apologies, but if block zero get hacked? It sounds like the answer is no, right?
You know what? We'll get into some, so basically, in fact, let me see what my next slide is. All right, that's a wallet address. All right, I don't want to jump into that yet. So to answer your question, basically picture this. Think about Google, right?
Yep.
You go onto Google, you search something, and within a millisecond, you get an answer no matter where you are in the world.
Yeah.
How do you think they're able to pull that off?
Magic.
Right? So the way they pull that off is they have servers all over the place.
Got it.
They have servers all over the US, all over Canada, all over Europe, all over the world, right? So in a way, Google has a decentralized network, so to speak, but since they own it all, it's centralized. Picture the way Google has servers all over the world.
That's a great analogy. Yeah.
That's exactly what Bitcoin is, except for the difference is
there's no Google bot. There's no centralized.
I could be a server. You could be a server. If I'm running so there's something called a node. That's essentially what a miner is running to keep the Bitcoin blockchain going. So Bitcoin, and there's a website for that. You can literally go to this website. It will show you exactly how many Bitcoin nodes are running at that very second. And I honestly should have refreshed my memory a little bit. Last time I looked, I forget what the number was. It was either like 10,000 something or maybe even 100. I forget, but it's a huge number. So that's essentially what's happened is we created a worldwide network with Bitcoin, the Bitcoin blockchain.
Yeah.
And it's run by anyone that wants to essentially produce blocks and try and get a reward. There's no guarantee that they're going to make money. It's almost like being an entrepreneur. Running a node on a blockchain is like being an entrepreneur. You're like, you know what? I think I can do this, and I think I can do it well, and I think I'll be able to get the reward, so it'll be profitable. But it might not be. There's people I know that run nodes that don't make money just because like they want to be involved in the Bitcoin project because maybe there's a social media aspect tied to it. Which is one of the coins I'm involved in. So that essentially is what makes it so kind of like decentralized, and then also gets into, can it get hacked? Well, the only way it can get hacked is if A, it's centralized and someone has control of it all, and then either A, they do whatever the hell they want, or their server gets hacked, or B, there's something called a 51 attack. Basically, if someone's able to get control of 51% or more of the network at any given time, then technically they could, quote unquote, duplicate blocks and then make changes and do what they call like a double spend. Okay. Obviously, I guess anything can happen, in the world and in society. But given the framework I just described to you, to me, it's impossible for someone to get 51% of the Bitcoin network.
And you can, right. It sounds like it just in my own,
just the computing power that it would take. So,
right.
Someone like literally Google as a company would have to try and do it because they're probably the only ones that has the money and the computing power to pull it off.
Sure. Well, Apple too. Don't forget about Apple.
Well, yeah. Well, I'm just using Google, but Apple, Facebook, Microsoft.
No, I was kidding. But we could dive deep on all that. We'll move on to the Bitcoin wallet and then go from there.
So, I wanted to make sure actually I got that point.
No. I want to make one. I think I once had a node on my back that was removed. So that's my experience with nodes, just so you know. But let's talk about
unfortunately, that one wasn't profitable.
That's right. No, it was not. In fact, it cost me money.
So just the takeaway from that is, worldwide network of computers, and it can be anywhere from a business to just you and me running a node.
That makes it so much clearer to me. Okay, continue. Let's see what's
all right, so Bitcoin wallet, let me I'll bring up all the text. So in the end, Bitcoin wallet, this is what's more particular to you and me in terms of this is where I keep my Bitcoin or whatever crypto. So as it says, a wallet's where you keep all the information relevant to your Bitcoin, and we use our wallets to basically send and receive them. So that's what I'm going to, I would use my wallet and you would use your wallet for us to send Bitcoin to and from each other. So when you open a Bitcoin wallet, you get a wallet address. Basically, you want to look at it like it's your bank account number.
Makes sense.
So you have basically two integral addresses / keys you get. Sometimes people call them wallet keys. You get your wallet address, which is basically something that you can share to the public. In fact, if you can see on the screen, you'll see like that wallet address that's showing. You see?
Yeah, the 19JB,
Yep.
that ridiculous number. Yeah.
That is actually one of my Bitcoin. That is my wallet address to for my Bitcoin on Bittrex. Like literally, like if someone wants to send me Bitcoin right now, they could use that address.
Okay.
And the reason I put it out there is to
Yeah.
show that your wallet address, you have nothing to worry about. You can share it with whoever you want, because all that wallet address does is let you receive coin. That's basically like me giving you my email address so you can send me an email.
Okay.
So there's another address that basically calls like your private key or whatever. That one is what you would use if you want, like if I wanted to send you Bitcoin, I would need to put in essentially my private key in order to
Create the transaction.
it's like your password. It's your password.
Yep.
So that's the one that you don't want to share. So when we get into people worrying about like how it works and if it's safe, well, there you go. Your private key is basically your
PIN
bank account password. You're not going to give me the password to your bank account.
Well, it's your PIN number, right? I mean, essentially,
it's your PIN. There you go,
right?
a PIN.
Yep.
Like so, just like you're not going to give me your PIN to your ATM card or give me your password to your online, banking account.
Yeah,
you're not going to give me.
I'm going to swipe the card, and you can see the number. I scan it on my phone to pay for stuff, the card information, right? But I'm not going to go and give you the PIN to access
Exactly.
My right? So yeah, that makes sense.
And that's why I'm trying to make that example, because just like you wouldn't share your PIN or your online banking password with someone, you're not going to share your private key to your Bitcoin wallet. So as long as you don't do that, well, you're not going to get your Bitcoin stolen.
Right.
So that's the difference. You only want to share your wallet address. That's how you can receive Bitcoin.
I like that. This is becoming clear. Yes.
Yes. So let's just get into quickly what kind of wallets there are. So there's two types of wallets. There's basically, you can call them hot and cold, or also soft wallet and a hard wallet. Basically what that means is I almost kind of compare it to like your checking and savings account in a way, because your checking account is something that you use regularly, money in and out every day, and then your savings account, generally you're stacking money and you're not doing many transactions. So a soft wallet or a hot wallet is basically somewhere where you can get your coin, readily. Right. So that is basically something like keeping it on an exchange like Coinbase, or using like a web-based wallet. And I'll give a couple examples, I think on the next slide of what I use. A cold wallet or a hard wallet is literally cold storage. It's referenced as a lot of times because you take it offline. Like there's devices, one of them is called Trezor, and it's literally like it's a little square thing with like a UBS, and you plug it in and you literally put your coins on it, and now you have your coins stored offline. So completely safe, well, unless you decide to lose that, to do that, make sure you put it in your safe. Yeah, make sure you put it in your safe if you're going to do cold storage. That's why I don't do cold storage.
But you can literally like pull it out of the interwebs, as they say. And
yes and no.
Stick it into a wallet. What's the no?
Well,
I get the yes. What's the no?
Because case in point, in fact, let me move forward. So there you go. Software wallet, Exodus. Exodus is the software wallet I use. So I have Exodus. It's literally a piece of software on my machine. It's not a website. My Ether wallet is a web-based wallet. I'm a little more comfortable with something that's not web-based, just on my machine. So I have software. It's called Exodus. It's free to use, and that is where the majority of my Bitcoin is stored. So here's the thing: what happens if I lose my laptop, or what happens if my laptop crashes? All my coins are gone. No, they're not. You can recover your coins, because guess where your coins are? They're on the blockchain.
Yeah.
That transaction existed. So if my laptop was to blow up, now granted it'd be a pain in the butt, but I could recover all my coins literally by downloading Exodus again and doing whatever the steps are to essentially retrieve that information off the blockchain.
This makes sense why companies are using the technology for things other than Bitcoin crypto transactions. That makes a lot of
Exactly.
sense, right? It's always there, and
It's
like you
always
said,
there. So, because like I said, once it's on the blockchain,
right.
it's what happens in Vegas stays in Vegas.
For someone to take it all over, right? They would have to have the computing power, as you said before, to take over more than half of the
Exactly.
blockchain.
Exactly. Which with
Interesting.
Bitcoin is to me impossible. Maybe, there's been some small rinky-dink BS coins that it's happened with, but it's basically like, as they call them, shit coins, aka penny stocks.
Yep.
And it's very much
So
something
fascinating because like the whole pink sheets, penny stock, there's such a relationship between this.
People
and
don't
the
realize
stock
how
market.
many parallels there are.
Yeah.
And like, as I watch the blockchain and the crypto, you know, economy grow, it reminds me so much of what we did during the internet growing, and how we had, for every one Amazon, we had a pets, we had 10 pets.com.
Right.
The same thing with crypto coins, literally the same thing.
Yeah.
So it's very interesting, the parallels.
This is good, man. Yeah, let's roll through.
Yeah,
we're kind of shorter on time, but this is really like eye opening. I love this.
Yeah, so that's the deal. So just understand the wallets. There's the cold wallet, the treasure. So a little rusty on my slides. Actually, I haven't used this presentation in a while.
You said Trezor before. I was going to ask you, can you spell that? But there it is.
There it is. Trezor. And there's a couple other brands, but that's one of them.
Sure.
My accountant actually has one. He had bought some Bitcoin like a year ago. He called me up. I was like, does this mean I get some free tax help?
No.
Didn't really work out. No.
I don't think you do.
No. He's awesome, though. He's also a real estate investor. It's always good to have an accountant that is involved in the things that you invest in.
Wouldn't.
All right. So we talk. I kind of get ahead of myself with the wallet key. So here you go. You have your public key, your private key. So just to recap, public key gives you the ability to view your wallet and receive funds, and your private key is basically your password to your crypto.
Public key is what you showed on the screen, and we talked about the private key being like your PIN on your ATM card.
There you go. PIN, password, whatever works for you. So that's it. Once you understand those two key differences, you don't have to be worried about really like messing up and losing your money.
Makes sense.
So there you go. Do not share your private key with anyone. Keep a back. That's the thing. Your private key, keep a backup. I'm shaking because I'm slamming the screen right now. Keep a backup of that. Like literally, I have that printed out in a safe in my place. Because if I lose it somehow, because your key is not going to be a password. This is what also makes it stronger. It is not something you're going to be able to remember. Do
you want to give your full home address right now, since now we know where your PIN is?
And the gun closet's in the living room. I live in Florida. All you need is a library card to get a gun.
True. Good point.
No, seriously. And that's another thing that makes it more secure is that unlike with, our credit cards and our bank accounts where they kind of let us make up a rinky-dink password, although they're getting tougher about that. In fact, a lot of banks are now doing that 2FA. Where they got that from? They got that from cryptocurrency. That started with crypto.
Yeah.
So crypto technology is already being used in our everyday life with our traditional banking system.
Makes sense.
Your password, your private key is going to be something that you would never be able to remember. And this is why you need to make sure you save it somewhere, print it out, put it in a safe, or whatever. You can even just keep a copy of it in a notepad on your laptop. Obviously, if someone ever gets access to your laptop, then you're exposing yourself. But and I guess in a way that also makes it, sort of inconvenient for people because they're like, well, I want to be able to just remember my password, 1235, my kid's birthday.
Right. Yeah. But
way less secure. So like after we get off this call, I'm going to try and hack you. And I'm like, all right, I think I know his one son's birthday. And
makes sense. No, that's a good point. All
right. So anyway, so how to buy cryptocurrency. And basically we're almost done here. So I mentioned Coinbase a bunch of times. Right now, the easiest way to still buy crypto is to use an exchange like Coinbase, like Bittrex, like, a lot of those other ones aren't US based. So we'll just stick with those. So my thing is though, if you buy crypto, let's say on Coinbase or an exchange, you don't have to keep it there. You can basically send it from your Coinbase account to your wallet, which is basically what I do. I do leave some on Coinbase because, as we know, I'm also a trader. I used to day trade stocks back in the day. So I have an amount on my Coinbase and Coinbase Pro account, so I can still trade. In fact, I bought some Bitcoin the other day when it looked like we were going to rebound. I bought some over the weekend because that's the thing. It's 24/7. Like the blockchain goes, Bitcoin goes. There's no market hours or any of that. So I actually purchased some fresh Bitcoin on Sunday because it looked like A, the stock market was going to bounce for Monday, and B, it looked like crypto was going to bounce, and it ended up being a nice little trade. I actually am still holding it. But yeah, generally, unless you're actively moving your coins around, you're better off keeping them on your wallet, because then you don't have to worry about if Coinbase gets hacked. Because exchanges do get hacked.
Sure.
You know what I mean? Like that's when you see stuff in the news like, oh my God, 10 million in Bitcoin it's always an exchange. It's not like, these 1,000 people that live in West Palm Beach, Florida, like that are on this, whatever, internet hub, in this city, all got hacked. Like that doesn't happen.
Right.
So that's why I suggest if you're holding coin for long term, at least download like Exodus or something like that. Have it at least on a soft wallet on your machine, so it's off the exchange. Because the bottom line is, you personally are way less of a target than an exchange that holds hundreds of millions in cryptocurrency.
That's fair point. Fair point.
So anyway, yeah. So and I put this link I put up there. I just threw it up there because basically you can get a $10 bonus. Anyone that if you go to Coinbase using that link and you buy, I think if you grab at least $100 worth of any crypto, I'm pretty sure you'll essentially receive $10 in Bitcoin. So, I mean, just like that, you made 10% on your money if you invest in Bitcoin. So I just wanted to throw it out there. Figured can't hurt. And again, like I said, easiest way to buy Bitcoin or any crypto right now is going to Coinbase, because it's as simple as connecting your bank account like you would with a lot of other things, like using the Robinhood app or whatever it is. And then you just, able to essentially purchase coin like you're buying something on Amazon.
I like it.
But like I said, from there, you might want to move it off the exchange. And that's really it. I'm actually hoping it's in the works. The book has been done. It's in the works to be on Kindle, but I get deeper into it in my short little ebook here.
Love it.
That should be on Kindle within the coming weeks, probably, hopefully before this recording actually comes out. And it's a short ebook. It's about 21 pages. And basically everything we talked about, it delves further into it. It gets into some of what we talked about and then takes you to kind of the next level of understanding not only Bitcoin, but really grasping some of the other coins and how, even though they're very similar, there are some subtle differences that you should understand. So yeah. And obviously I named the book, to knowing what the heck Bitcoin is for a reason, because just like you said at the beginning, like, what the heck is it?
Right. That's exactly the question that everybody has. So, all right. So to get everything, where do people go for this and to learn more about you? Is it scaredycatguide.com or?
So obviously anyone can go to scaredycatguide.com. And, I have obviously my real estate stuff there. I have my crypto stuff there. I blog about both.
Well laid out site. It really is.
Yeah. So the website, there's a lot there. As far as this little crypto ebook, you can find it on Amazon Kindle. It should be out within the next couple of weeks. So essentially, just if you search Scaredy Cat Guide, you'll probably see this, and you'll probably see my real estate book. I'll actually, I'm throwing it up there. I'll have it up there for 99 cents for a while too, so people can basically.
I have your book too. I don't know what I did with it, but I have your book.
My real estate one. I was smart enough to have one on the ready. So
that's
I got
right. There it is.
There it is. That's my newbie real estate investing book. So
it's good stuff. And to give you guys a sense, Scaredy Cat Guide, the whole idea is, like the conservative mindset around investing. So if you are somebody who tends to, that's unfair, but if you are somebody who tends to like, okay, how do I invest without getting hurt?
If you're risk adverse, if you hesitate to pull the trigger, if you're paralysis analysis, I was, and I still am all those things. And basically what I've done is through education and through processes, alleviated that and forced myself to move forward, to pull the trigger. Because the bottom line is, if you're just someone that's built risk adverse, you don't magically become not risk adverse one day. You're always kind of built that way. You do what you can to essentially excel, even though you kind of have that, that mind, that attitude or that mindset. I mean, you just kind of overcome it.
Love it. Love it. ScaredyCatGuide.com, Amazon Kindle for the ebook. Watch for it. By the time this is out, it should be out. And if not that, you can also get the real estate book. But fascinating stuff, Mitch, man. This is great. Always educational. I've got way more clarity on Bitcoin. I'm actually thinking about jumping on it and buying it. So easy is way easier than what I thought it was before. Or I didn't even know what it was before. So as always, man, I appreciate you taking the time, educating all of us. And thanks for being on.
Thanks for having me, man. It's always a good time.
All right. We'll see ya.